Morning, everyone. Happy Friday. Welcome to this morning's edition of the Morning Call from MPC Markets. It's the 12th of June. I'm Mark Gardner. You can subscribe to the MPC Morning Call and just get it pushed to your phone or whatever in the mornings on Apple Podcasts, YouTube, or Spotify. Subscribe now. Look, we essentially we were off yesterday, and Trump was saying that he was going to start he did attack Iran. He was going to take Karg Island, and then within 2 hours he reversed that and essentially said at around about the 25-minute mark in a press conference he was having with US fishermen that there was a peace deal done. So this is the 39th peace deal that Trump's announced. Look, I mean, the boy who cried wolf is probably looking pretty reliable compared to Trump right now. So all that money just flooded straight back into that SOX index. I think the SOX index was up about 7% overnight. So beyond Trump, announcement and statements, the only thing anyone's talking about is SpaceX, of course, and it is, look, super exciting. I know there's been a lot of negative press and etc. about it, but look, it is a very historical moment in terms of this being not only the largest IPO in history, but probably the coolest IPO in history, I think, more than anything. And there's been a lot of talk around retail, etc. But either way, as long as your position sizing's fine, look, I think it's there's worse things to spend your money on, to be involved in something as landmark and as exciting as the SpaceX IPO. Rumored to come on around about 1 p.m. New York time, which will be in the middle of the night here. So we had retail investors actually, despite copping criticism across the board for the IPO document, ASIC in Australia actually said it wouldn't have even passed muster here in Australia. They wouldn't have been able to release it. Retail investors are actually more bullish than the than the IPO document, which let me tell you is one mean feat at 100 times sales. So yeah, look, the S&P essentially down like an absolute smidge essentially for the week. We've pretty much recovered everything. The NASDAQ slightly up, the Russell up, the Dow was flat for the week, by bang on flat for the week. And I think we'll probably see the Nikkei, the Chinese indices, and the Australian indices. I think their SPY was up about 150 points last check at around about 8 o'clock. So we will probably end up for the week, which is miraculous considering what's going on. But just some stats around what Trump stated. So basically, he's since this has started, he has claimed that they've defeated Iran 55 times, that Iran is destroyed 35 times, that a deal is imminent and will be signed over the weekend, etc. Something around that sort of theme. Today was the 39th time, and it was a little bit odd that like I said, they're having a press conference around reopening some international waters for US fishermen off the Alaskan Pacific coast. And in 26 minutes into the press conference, he chose that point in time to say that something will be done over the weekend. Supposedly, and I use that word very strongly, supposedly it's all approved by the US, Saudi Arabia, Qatar, Turkey, everyone, blah, blah, blah. And there's a memorandum of understanding, which essentially is, you may as well write in the back of a napkin. It's been agreed to. Importantly, no one from Iran has said this. Trump said that he's spoken to the supreme leader of Iran, which is a bit weird because he's got health issues and no one knows where he is, and he hasn't even been on Iranian press. So, yeah, as the thumbnail and the title image showed, me yawning. Yeah, it's getting a little bit old, but it is one of those things that in frothy markets that any distraction's a good thing. I think this sums it up pretty well. We're at 39.2 trillion in the US debt. Trump is going to fix that. Iran and Hormuz, inflation, etc. He wasn't going to create geopolitical situations. He's created, God knows how many, 3 or 4. We've now got Shiller CAPE ratio at 41.5. So the Shiller CAPE ratio is the cyclically adjusted PEs. It's a 30-year average around about the 28.7 mark, and then a long run average of about 20-ish. So we're since 1881, we're in the top 1% of ratings for how high PEs are cyclically adjusted. Look, there may be some justification around that because we're also at the highest concentration, and it's a bit of an industrial revolution style thing, whatever. But either way, it's pretty damn high. So price to sales ratio for S&P is 3.7 times sales. It's 60% above the dot-com era bubble peak. And look, I mean, yeah, it's fine. Quite clearly, it's apparently fine. But yeah, obviously, I'm a little bit tongue-in-cheek from my point of view. But I wouldn't be putting my money in up here at these levels at the moment. Gold, basically, gold, silver, cyclicals, all bounced in reverse. So that just reduced the damage for the week. Uranium and lithium were getting pounded, and even Bitcoin had a rally. There you go. Look, it's one of those periods in the market where you can get really frustrated, and you can look at the economic stats and blah blah blah, and just be like, But the bottom line is, you can't fight momentum, you can't fight sentiment, and you just got to be patient. And this is one of these periods where you don't want to get suckered into, you don't want to get suckered into committing, to be honest, either way, and stick to your methodologies. And look, from our point of view, we're recommending to clients that take off those positions that have done very well, that you think are frothy, or reduce them at the very least. Take off some positions that you might be concerned about, etc. And just sort of get cashed up, and probably realize that there'll be a dip at some stage, and you're going to need capital to get involved in that dip, and that cash is going to be really valuable to go and buy into these long-term thematics that at the moment are the silly valuations, but they may not be if we get a significant pullback. So these midterm years on average see a 16-17% pullback. In the last 80 odd years, between this May to November period, a minimum 10% down every single midterm election period for 86 years straight. So yeah, it's just smart money is just get cashed up, be patient, and make yourself those shopping lists and get back into it. Look, the likes of Nvidia or the likes of Micron, they're going to be great companies. There'll be some great software names out there. There'll be some great cyclical names out there. And look, but if you don't have cash and you're dealing with a fast-moving downside market, you're not going to be you'll be panicking. You won't be buying, and it will likely be the way that this president's operating. A bull market until he's out of office, essentially. So. Because of SpaceX and the 39th deal, the PPI numbers, which were white hot, were just ignored. It was actually difficult to even get this chart this morning. Most of the major news agencies weren't even covering it. Like, I had to dig into Reuters to find that. But we are at our highest PPI levels. I think since November 2022, and look, that was the worst bout of inflation we've seen, since the 70s. This now we've and that's on the back of that hot CPI data, and basically all main measures of inflation now are they're not just hot, they're like melting point hot, and it really is going to push. That PCE, which is the Fed's measure of inflation, I think they're saying it. Let me just find this here. Sorry about this, people. The PCE number is going to be around the 4.1 year-on-year headline and 3.4 core. So the ECB also hiked rates last night, yet again ignored. But when the market wants to bury its head in the sand, it does. So, like I said, the trick is not to fight it and not to get frustrated by it or angered by it. There's a lot of bears online losing their minds, but that's life. You just got to just stick to your plan and be patient. So calendar next week, we've got RBA on the Tuesday. We've got some industrial production of capacity utilization on the Monday night in the US. FOMC press conference on that Thursday morning. I think it's a 2-day meeting. You've got Kevin Walsh coming in as well. There's no earnings. I don't even know who Kroger is, really, to be honest. Certainly never come up on our screeners. So, but yeah, so we're not going to have any worries about earnings week. But look, it will be interesting because Kevin Walsh, Trump, whether he walks the walk or was just talking the talk, but he's between a rock and a hard place because Trump wants rates down because of that 39 trillion debt. And there is not one single piece of economic evidence to suggest that rates should be lower. If anything, they should be higher. So yeah, we've got I would say a relatively quiet week next week once the FOMC is out of the way, and then you've really got no earnings leading into end of financial year here in Australia. So a fair bit of dour reporting on the banks. The Australian financial media is the opposite to the US financial media. They love to kick anything while it's down. And like the AFR, which is just literally like hatchet job after hatchet job on anything that goes wrong, and barely celebrates anything that goes up, is just absolutely going at the banks at the moment. And which is a little bit of a new feeling for bank investors. Their other feature article yesterday was about how investors are getting hammered. So look, people, it's a little bit over exaggerated. There's some pretty high quality companies in there at the moment, and if the ASX is going to improve, we need to get behind our quality and mid cap companies here. Otherwise we're all destined to just track ETS for the rest of our life. On demand now, scan that code. You'll get the Software Survivors 2.0 webinar there. This is a sequel. So there was one back in March as well. You can get it on our YouTube channel. It's very much available, or it's actually on that landing page. But there's an interactive map there where you can go through some of the software companies and you can see what our investment thesis is. The 5 pillars that we're using for justifying which ones are going to survive, benefit, which ones are going to be casualties, etc. A whole bunch of work's gone into that. Kai Chen, our resident AI and tech expert, does a fantastic job at explaining it in normal terms, not in tech terms. So yeah, but for those of you who don't know, we've got Bulls versus Bears. Myself, Kai, and Jonathan Takadina have a weekly podcast, pretty informal, pretty casual. Just go through what's happening in markets. We'll be discussing the mega IPOs today, because we've obviously not only got SpaceX tonight, but we've got OpenAI and we've got Anthropic coming up in the coming months, and and we're going to go on a little bit of a deep dive around those, and then probably I don't know, we'll probably pick our favorite out of the three in terms of couple of maybe some 6-month performance, etc., and do a little bit of a dive into it as well. So yeah, but look, if you don't jump on that podcast, and I highly recommend it, but we have a great weekend, and we will speak again on Monday.